Hey, good afternoon, everybody. This is Dennis Wilborn with the Active Trend Traders. I want to welcome everybody to the Making Money Trading Stocks, Options, and ETFs. Going into 2019, I hope to also include in that making money trading stocks, options, futures, and ETFs. But we're working on some of that stuff right now. I'm not going to be a day trading option futures kind of guy. However, there are some opportunities that set themselves up in with the futures that I think members would be interested in, especially if you're really wanting to focus in on generating a weekly income. It's for a very small margin amount. You're able to, in fact, do that, and so that's what I'll be working on, providing some just basic, here's where to do it, and here's some interesting places to look. Want to remind everybody that all the materials we do present are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance is no indication or promise of future performance. A little bit about my background. Basically, gosh, the Active Trend Trader has now been functioning and in business since 2007. So we're working into our 12th year. And just I really enjoyed hearing and seeing people really turn around and do well with their trading. So I started trading for a living back in 2006. Always buy wholesale and sell retail. Works in stocks and options also. Oftentimes we get hung up because we tend to buy towards the high and sell towards the low. Not the best approach for making money in the stock market. Unless you have it reversed where you're selling high and buying low. That's a different thing. That's what you would be doing when you're shorting. However, what is our objective from this session? Okay, we try to keep it about 10, 15, max 20 minutes. We go over and highlight a couple of things for folks so they can be looking into that next week. I want to provide timely, actual intel review at the end of each week. Market review. So we were looking at in-quarter adjustments moving into the year-end setups. Stock and ETF performance of any bonus trades we may have going on. Here's what we're seeing. With the big spike down this morning, a couple of our positions really came in nicely in strategy 3, both BABA and Tesla. We had been, collecting premium on them on a weekly basis. We made good premium collection on those this week, and also then having the price of stock fall like it did today also helped bolster those returns there. So we're sitting. My objective for every year is to hit 40%. Over the last 7 years, I've averaged a little bit over 30%. So, I'm last year we were well over 40% in our return for what we were trading last year. So let's take a look at a couple of entities. I got started here with the S&P. This is the chart I had on when you first dialed into the session. And if you take a look at her, what are we seeing with the S&P? Well, a couple of things. One is on a daily chart, we have had a nice breakdown. We've taken out this low, this swing low, and it's really close to taking out that swing low right there. In fact, it hasn't quite taken it out. But that swing low, then if it takes that swing low out, let's put a price tag on that. See how close I got to that. Swing low equals 28.64.26. So I missed it by a little bit. I can go ahead and modify that. It was 12. And that way it'll be precise where that swing low is. There we go. And as you can see right now, that swing, past swing low is actually working, and that was a breakout area. And so it's working as a level of support. I'm paying attention. If the end of the week closes below this yellow line, that's the 50-day moving average, then that would be indicative that, hey, there may be more time downside to expect. On a weekly chart, we had kind of a double top function in the TSI, price action bearish engulfing, following a bearish engulfing, following a bearish harami. And so that's all confirmation, pulling back down. Again, there's your support right there. Drop that support, then we're probably going to drop all the way down here to the 2,800 level. How much of a drop would that be? It's something important to kind of keep in your back pocket. Well, if it drops down to 2,800, that's only about a 4.7, 4.8% drop. How far down would a 10% correction take us? A 10% correction or a pullback would take us down to about probably the 2650, about the 2650 level. Right about right there, 2650. And as you can see, that was a past level of some congestion where prices turned back around and ran back up. So we've looked at this in the past. Where are we expecting this to fall back to as basically, and what type of time frame? We're anticipating a pullback in the 4 to 6 to 7% range. Watch for the reversal candlestick. Watch to see if price action closes below the 50 for the day, and if our TSI is still pointing down at this sharp of an angle, the sell-off is most likely to continue. Again, wait for support. Wait for support to identify itself. We know we have some out there at 2864, and we'll continue to look. Pull that over to the S&P or the spiders. You just compare the two to see which one, as you can see, pretty close to being on par with each other. That's where you got to remember the ETFs are a derivative of the larger S&P index. And so let's go over and look at the Qs. What are the Qs doing? As we can see, as it stands right now, the spiders are the strongest of the entities. The NASDAQ is the next strongest of the entities. Now what? Okay, come on. Okay, what do we see with the spiders? For the day, we are moving and we have busted through the 50-day moving average. That's the yellow line. The golden dot is the 34, which has been, I'm really glad we've added that as a parameter, because oftentimes we see that 34-day moving average, which is typically used by a lot of futures traders and also Forex traders. It does a really good job of being kind of a line of demarcation to trade around. Works well on all time frames. What are we seeing here? We are breaking down significantly below the 50. Matter of fact, it broke down so hard today, it almost went down to the 100-day moving average. And we're getting a stop right there. Buyers came in right at the 100. Past support, as indicated by these candles here, and also this reversal pattern here where buyers came back in. Where did they come back in? Just about where they came in today. However, is it a strong or a weak looking chart? What we got to do is look at here at the TSI, pointed down, market forecast, longer term market forecast. I'm looking at the green line primarily, pointed down. Same thing over here. TSI, off of a negative divergence, finally reversed to the downside, is pointing down. And TSI is starting to roll over. Now you have to remember, with these weekly TSIs on the indexes, they tend not to get down very, very much past the negative 40 or the 50 level, and then do a rebound. At least that's the tendency has been. Same thing here. As TSI on a weekly chart approaches this zero line, wait for a potential reversal candlestick on the weekly, reversal on TSI, and a move back up. I would like to see this pull back into, time-wise, I'd like to pull back to wait to last until about the midsection of October, or in other words, somewhere between October 10th and October 20th before going into its upside move. Again, nice sell-off as we're seeing. Do we buy this low? Do we buy this low? Now, the most conservative way to approach it is to basically say, no, we don't. We wait till we get confirmation that we are getting a reversal. The lower wick here looks positive, but this is a negative bearish candlestick, large red, and we see where it finishes. If it finishes up back above the 181 level, then that changes the story. That changes what's going on with the entity. What else is going on here with IWM? Okay, IWM, weakest of the three. As you can see this morning, earlier this week, I think this was, that was the first, that was Monday. It pulled back up into the moving averages to the 50 and the 34, reversed, put in a, now this isn't a reversal bullish, bearish engulfing pattern, but it is a bearish engulfing candlestick. There's a difference in that this is just indicating that continued weaknesses, and sure enough, drops down to the 100, test at the 100, almost straight across, then falls again over the last 3 days. Where does it fall to? All the way down to the 200-day, correction, yeah, 200-day moving average, which corresponds very nicely to what? The 40-week moving average that we see here on the weekly chart. Again, have we any indication that this is ready to reverse and turn back around? The answer to that, of course, is no. We know we have strong support at the 160 level, strong support there. And so we can anticipate, yeah, that's where we could get a turnaround. Oh, and some people may want to say, hey, that's where I'm going to be a buyer. But the fact of the matter is you don't have to be a buyer. As you can see, we've got a nice break of this channel it had put out, and we had an acceleration to the downside. Sell, 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 sell. And what's interesting is at the same time this was happening here on the IWM on Monday, remember Monday what was going on with the S&P and the NASDAQ, is NASDAQ was rallying based on the great news that Canada and my wife just scared me to death, guys. She came in to say goodbye. She has to go run some errands, and she grabbed my shoulder, and I just about fell out of my chair. Sorry about that. So if that gasp for air you hear, that's what that was. Anyway, Monday, what was happening is the other indexes were rallying up. However, this is now, while the IWM, the Russell, was selling off. Part of the reason why basically is because with the trade deals that are happening, it could make things tougher on the smaller cap stocks. And so anyway, we'll pay attention to that. And so Eric asked a question here. How would you measure the IWM channel? Very simple, Eric. I would just basically measure it from the low straight up to the high, and it gives you a dollar figure for the, and a lot of times what people will do is they will take and they will measure that and then extend it down. And as you can see, just looking at this, it is already extended. It has already met any type of downside target from the channel. But the way I would measure this is just very simply, I would take this, my straight up, I would measure it just basically from the bottom of the channel to the top of the channel, Or I think I put this in as a channel line. Let me see if I did or not. And if I did, I can just right click on that. I can right click on that. And as you can see, and the answer to that is no, I didn't put that in as a channel line. If I would have put that in a channel, that's a great question, and I'm going to erase this for a second, or I'm going to erase this totally. Remove drawing. Remove drawing. Now I want to redraw this as a as a channel line. So I go here, come down, and I wanted to. I'm not going to count that Pinocchio nose because I want more than one touch. So there's that one, and I extend that down to where the lows are, which is about there. And now I can basically just go on that, and if I right-click on it, it'll tell me exactly how large my channel is. So I don't know if you knew you could do that or not, but you can. And as you see, right-click, and as you can see, you really don't need to right-click it. Maybe I'll just hover. There we go. It is $2.40. So that's what I got going on with IWM. That's what I have going on with, there has been some just, and as long as we're here, let's go run through the FANGs. Let's start with Facebook. Now, of course, if the FANGs are doing a really crap, if they're selling off, and as we can see with Facebook's been selling off for quite some time. Okay, 220 up here, from 220, it has dropped. From 220 to the most recent low, it's dropped. I got some bandwidth issues going on this morning. Please bear with me. Okay, here we go. So from here to approximately there, you've dropped about 28%, or about $62. Our next one, which is one of the A's, Apple, big sell. Apple's actually, come on, hold up a little better. Look where it's pulling down to. Kind of interesting. It fell right down to the 34-day moving average, stopped dead in the water, and is rebounding for a little bit for today. Not really. I mean, we've got a little bit of bearish negative divergence going on with the TSI, both on a daily and a weekly. This is kind of a double top type of thing going on here. And so interesting rebound off the 50. We'll see if that continues. So Apple's helping to hold up what's going on with the market. What about our other Amazon? Okay, Amazon also holding up a little bit, but Amazon looks a little bit more toppy. This is a really nice up-down motion. If we drop down below the bottom of this, Amazon's got a really good chance to run back down here to the 118 or 18 or 1800. What does the fib say? The projected fib downside say for this? Well, it says. Okay, look at the 1, 2, 3 retracement. Oh, there we go. 1, 2, 3 retracement. It's already reached 100% retracement. The 1, 2, 3 retracement, or yeah, 1, 2, 3, 6 retracement. Takes it down to here. If we close below that, it hugely increases the probability of getting at least down to a 1618 retracement, which takes Amazon down to the 1758 level. Now, I'm not going to say we're going to be trading this. However, if Facebook, Amazon, Apple, and then moving on over to Netflix, Again, Netflix, bear flag, moving up, broke this triangle to the downside. What's its projected move down to the downside? Well, you go down over here, take this low, measure up to the top of the triangle. It's, you know, it's not exact, but it'll give you a really nice little estimate of where prices may go over the next, what looks to be about a month to a month and a half period of time. Could this be telling us anything about how 2019 may be shaping up? I think it could be. And the reason I say that is we just had two, you know, we're having two just really huge, come on, get over here, two huge years in a row that are very unusual for the first 2 years of a, you know, in the presidential cycle. There we go. So breaking this pyramid here, that puts us a trajectory, breaking back down to the bottom of down in this area here, which is, guess what? Right where we caught a bid previously, about the 330 level. So Netflix could be good for another, you know, down to the 330 level. I hope doing how, you know, showing how these technical measurements are done, I hope that's sinking in and helping folks out a little bit. Let's see, and our buddy Google. Does anybody really call Google Alphabet? Similar type situation. Wow, doesn't that look very similar to the Netflix chart? You can do the same type of measurement. If we get a close back down below the 1150, 1152 level, you can project downward, and I'll bet you it takes you right here to about the 1150, no, to 1050 level, which maybe a little bit inside that. I can measure that. Hold on. And so, and doing this, and I don't do this every day, but when I'm hitting the weekends, I want to be kind of have an idea, and I'll put a little note next to these. Okay, here's the projected downside. So there's your projected downside. Okay, 1083, which again is right into this congestion area. What's interesting is we have now broken back down below the 820 on the weekly, and we're closing back below the 50 on the daily. We've broken the 100 on the daily. So Google looks primed to continue in its merry way to the downside. So for what I'm looking at going into next week, basically I want the market to settle down a little bit, to either go back up, retest these areas, and then drop, or I'll flip over to a intraday chart and trade to the downside off the intraday chart, because I think that basically that will be especially true if spiders or the S&P closes below the 50-day moving average. I think that will change the tone and give us probably about a week and a half to 2 weeks worth of downside. Okay, let's see here. Okay, here's we're sitting with the three strategies that we work for. The active trend trading system. This is for premium members. Premium members get alerts on every one of these strategies. Strategy 1 is a growth strategy. Strategy 2 is a cash flow strategy. Strategy 3 is a growth and income strategy, utilizing leaps and selling weekly option positions against it. As you can see, premium members get a copy of this on the weekend, so they can be, this is our Magnificent 7 ETFs, and then some of the stocks that we're following, and give some idea of where we're trading in. Had a pretty good week last week. Strategy 3, BABA, had a nice profit of $221. Through the end of the year, I'm going to be focusing really hard on ensuring that we have trades, or when the trade's set up, we basically take the trades both for strategy 1 and strategy 2, and by default we will have the trades going on for strategy 3. Strategy 3, of course, is we brought in $415 on the BABA trade, $1,000 where are we at? $1,100 on the Tesla trade for the week. So our October cash flow so far for strategy 3 is 1538. Our BABA spread cash flow came in at 221. My strategy 2 objective is somewhere between $500 to $1,000 per week. So far, through 37 weeks of the year, been averaging about 184. And so we've got to up our game in that area, because I know that some people are, I would like to be able to provide that information for those who are really looking to seek some income. Okay, as we move into the middle of October, I'm looking at the, some people like the seasonality aspect. Normally, sometime between October and December, the Russell will catch a bid and run hard into the end of the year. Also, gold tends to catch a bid in the October-November timeframe and run hard into the end of the year. We'll be looking for both of those, and also a run into the end of the year with the NASDAQ and the S&P, whichever one's going to make the biggest bounce. Since IWM or the Russell is pulling back the most, I would anticipate that would hopefully give us the bigger bounce, bigger bang for our buck. Anyway, hey, the monthly BAM meeting is going to be October 13th. That's Saturday of next week. Start at 9 o'clock in the morning. That is going to be a webinar. We're going to cover the last of the fatal flaws of trading and how to fix them. That's we're following the last 2 on that, and then we'll be talking about some technical analysis aspect, and also looking for some stocks to trade. Premium member training every Wednesday night, 6:30. You can catch it live or catch the recording, and those are always put onto the website. Other enhancements, we have been working very diligently on the replacement for the early warning alerts. That is going to be launched. My son Brandon is over here in Hawaii. We are working on getting the launch dates and getting all the launches on that, so that we can get that information out to folks in October. So we're ready for the November, December timeframe, when we get a lot of renewals. What we'll do, if you are an early warning alert member right now through the end of the year, I'll be using the triggers that we're using for the market action points service, simply because they're providing better triggers. And so I'm going to use those. So there's, give you an idea. Here's basically the purple line down here is the S&P returns over the last, from 2002 to 2017, taking the MAPS trades on a backtest resulted in compounding, as you can see there. And so anyway, market action points are coming, and they will be here soon. So, okay, folks, that's it for today. I hope getting at that. Please, that's it for today. I hope seeing what I'm seeing with each one of those indexes will help everybody to kind of go, okay, I get it. I understand what's going on here. And I'm going to wait until I get a reversal signal. Or you may say, hey, I want to become a premium member, so I get the triggers sent to me. That's great also. And so anyway, hey, keep your egg growing. Trade wisely, trade profitably. You can find me on Facebook, Twitter, and of course at our website. So for some of us, we'll be moving on to the premium members next, which will be the final hour, looking for some things to trade into the going into next week. And with that, I bid you adieu. And from my home to you, I want to say aloha. This is the view from our upper lanai that my next door neighbor took. And so have a great weekend, everybody. Aloha, trade well, and prosper. Yeah, Eric, we can work on that. So aloha, everybody.